G'day guys, in this video I'm going to explain the essential information and tips and tricks that you need to know before investing in cryptocurrency. Before I start, I just want to make a disclaimer that this is not financial advice and it's for educational purposes only. What is crypto? Cryptocurrency is a digital currency that is programmable and on a blockchain. A blockchain is a network that keeps a log of all transactions. This data can be viewed freely for real-time analysis of new users and the amount of crypto moving around. One of the best resources to view this information is Glassnode. How is cryptocurrency different? Cryptocurrencies are different to your normal digital banking currencies and central bank digital currencies, CBDCs, in that they are decentralized. This means that they are not owned or controlled by a company or entities, however are run by community members. They may be created by companies at the beginning, however the control of the network will be controlled by the majority of the community. CBDCs are digital currencies that are developed by central authorities, mainly governments, that also run on blockchain technology. What is the first cryptocurrency? First cryptocurrency that was created was Bitcoin in 2009 by Satoshi Nakamoto as an electronic P2P cash system. It has, however, become attractive as a store of value due to its low transaction speeds and high transaction costs, and is called digital gold due to its finite supply of 21 million tokens. There are approximately, however, 2 million Bitcoin that has been lost and cannot be accessed. Bitcoin is created or mined as a reward for miners for solving complex formulas using purpose-built computers. These are called block rewards and are a transaction fee that is paid to the miners for processing the transaction. This requires a large amount of computing power and energy intensive. To keep the network secure, all computers in the mining network must be kept on. This ensures that the transactions on the network are correctly validated by the computing network and ensures that people cannot transact more Bitcoin than they have. Bitcoin is decentralized, meaning that it cannot be shut down by any government. After every 4 years, the amount of Bitcoin that is rewarded to miners is also reduced to half until the total supply of 21 million Bitcoins is reached. How many cryptocurrencies are there? Bitcoin is currently one of 12,554 cryptos as of this video, and the number continues to climb. What do they do? Each cryptocurrency has been created for different purposes. You can check out the range of cryptocurrencies available on coinmarketcap.com. Some cryptos are created as P2P payment systems like Bitcoin or XRP, as smart contracts such as Ethereum or Cardano. This is similar to operating systems for computers where decentralized applications can be created on them. Stablecoins such as USDT and USDC. These coins mimic the price of fiat currencies. There are also gaming tokens, governance tokens, supply chain tracking tokens, NFTs, decentralized finance, and many more coins that I will cover in a separate video. The first thing you need to understand about cryptocurrency is the market cap. What is the market cap? The rankings shown in CoinMarketCap are based on the market cap of the coins. This is the amount of money that has been invested in the coin. The higher the market cap, the more money there is in the project and more liquidity or the higher chance you have to sell to someone else. The lower the market cap, the less money there is in the project and the higher the risk of you not being able to sell your coins to someone else. The general rule about the market cap is the higher the market cap, the lower the risk, but the potential returns may not be as high as the lower cap coins. The lower the market cap, the higher the risk, but may have a potential of higher returns. The next thing you want to have a look at is the supply. What is the supply? The supply of a coin is the number of coins that are circulating. The price of the coin is determined by dividing market cap of the coin by the supply of the coin. Before you start investing into crypto, make sure that you understand the rules and regulations in your location regarding crypto and tax laws. Now you are asking yourself, why would I want to invest into cryptocurrency? Cryptocurrency is an emerging asset class that utilizes blockchain technology. It currently has a total market cap of $2.32 trillion and has the potential to disrupt the current financial system. Since the dollar has gone off the gold standard, that is, the dollar is now not backed by an equal amount of gold, fiat currency has continued to be printed out of thin air. This has led to increased inflation and the value of your dollar has reduced. Holding money in your current savings account will get you a return of about 0.01%, whereas the rate of inflation has been approximately 2% per year. This means that you are losing your purchasing power of your money. You can stake your crypto depending on the type of crypto to earn passive income. This is similar to locking your money in the bank for a certain amount of time to earn interest paid back in crypto. You can earn up to 20% by staking your crypto depending on the type of cryptocurrency. Cryptocurrency is also inclusive to people of all backgrounds, and everyone has the ability to invest by owning a smartphone, having internet access. The current financial system requires people with large amounts of capital to be able to invest. There are currently 2 billion people in the world that are unbanked and do not have access to the current financial system, such as access to banking, savings accounts, and loans. Crypto has made it possible for these people to access financial services and has allowed people from all backgrounds to start investing, since you can start investing with just a couple of dollars instead of hundreds of dollars in the stock market. Next thing I want to cover is who is investing or adopting crypto. Countries are now beginning to take notice of cryptocurrencies, such as El Salvador, who has made Bitcoin legal tender. Also, corporations such as MicroStrategy, PayPal, Grayscale, Tesla, and Twitter are all investing and adopting cryptocurrencies. The next thing I want to cover is the risks associated with cryptocurrencies. Like many other investments, there are risks associated in investing into crypto. Ensure that you do your due diligence or research before you invest into a coin. Do not invest money that you cannot afford to lose, such as taking a loan out to start investing. Only invest spare money that you have. Since the cryptocurrency market is relatively new, there are currently limited regulation depending on where you live in the world. Be aware of the laws regarding cryptocurrencies in your country. The cryptocurrency market is also very volatile and may move up and down in price significantly. You are also responsible for the safety of your own cryptocurrency. So if you lose access to your crypto wallets or send crypto to the wrong address, you will lose your cryptocurrency and will not be able to get it back. The next thing I want to cover is what to look out for when investing into a cryptocurrency project. On CoinMarketcap, you can find the information of all the cryptocurrency projects. You can click into the name of a coin and it will give you a brief summary of what the project is and what they do. You can also go to the official cryptocurrency website up here if there is an official site. The first thing you want to look for in the coin is the market cap and the position where it sits in the coin market cap rating. This dictates the potential upside for the project. Since Bitcoin has the largest market cap, it currently dictates how the market moves up and down due to the amount of money that has been invested into Bitcoin. The lower the market cap, the higher potential it has for it to move up depending on if the project fundamentals are good. The next thing you want to have a look at is the white paper, which can be found here. The white paper is a document outlining what the project is trying to achieve and how it is going to be achieved. You should have a read of the white paper and understand what you are invested in before putting money into a project. The next thing you want to have a look at is the team running the project. This can be found by going to the official website of the coin. Next, you also want to have a look at the roadmap, which can also be found on the official website. This roadmap should detail what the team are trying to achieve and the time frame as to when they are going to achieve each goal. Finally, you want to have a look at the community that is using or supporting the coin. It's important to understand if there is a backing behind the coin and there are people actually using the coin, giving the token utility and use cases. Also, a note before investing is to always do your own research and to not put money into a project just because someone else told you to do so. Next thing I want to cover is where can you buy cryptocurrencies? You can buy cryptocurrencies on cryptocurrency exchanges such as CoinGecko, Binance, KuCoin, and CoinSpot. Make sure you set up multiple exchange accounts so that you will be able to sell or buy a crypto in case any of the exchanges go down. The next thing I want to cover is how to store your crypto. You can store your crypto in multiple ways. One is using a cold storage hardware wallet, a hot wallet, or exchange. Cold storage hard wallets are physical devices that you will need to purchase. These devices store the recovery or seed phrases on a hardware device that is not connected to the internet. However, there may be applications for the device where it allows you to interface with the storage devices. Hot wallets are application-based wallets that are connected to the internet. Some include Trust Wallet and MetaMask and many more. You can check the official wallet applications in the official websites of the coins. Hot wallets are applications that need to be connected to the internet where your recovery or seed phrases will be generated from. Next is the cryptocurrency exchange. When you buy cryptocurrency from the exchange, it will automatically be stored on a wallet in the exchange account. The next thing I want to cover is what is a recovery or seed phrase. Recovery or seed phrases are a list of phrases that are generated when you create a wallet. If you lose access to a wallet or forget your password, these phrases can be entered to recover the funds from the wallet. It is the most important aspect of owning crypto to ensure that you do not lose your crypto. Next, I will describe the pros and cons of each type of wallet. The pros of hardware wallets or application-based wallets is that you are in control of your own crypto. However, the cons are if you lose your recovery phrases or send crypto to the wrong address, you will lose your cryptos. For exchange wallets, pros is that the exchange will look after your crypto wallet recovery or seed phrases. However, you do not technically own the cryptocurrency that is in the exchange until you send it off the exchange. The exchange can also be hacked and you may not be able to move your funds if the exchange is down. A simple phrase that you will need to be aware of is not your keys, not your crypto. Next I want to cover is where is the safest place to store your crypto. If you plan on keeping your crypto for longer than 6 months, it's a good idea to get a cold storage wallet. One of the best cold storage wallets out there is the Ledger. You can go purchase one at ledger.com, which is the official website. I will now explain how to keep your seed phrases or crypto safe. Best strategy to keep your phrases or crypto safe is to write down your seed phrases for each wallet that you have on multiple pieces of paper, noting which wallet each set of phrases belong to. Keep multiple copies of these phrases somewhere safe in different locations, and ensure you do not take photos of these phrases or have them on your phone or computer, as your crypto may be at risk if your computer or phone gets hacked. There are also multiple scams out there. Some include scams on YouTube asking you to send crypto to a wallet and promising to send you double the amount back. There are also fake applications that are in the application stores that try to steal your recovery or seed phrases. Do not send crypto to anyone that you don't know, and always check for official applications listed on the official site of the crypto project. Also, do not tell anyone how much crypto you have, and do not show or send your seed phrases to anyone. Lastly, I want to cover succession planning. After you've started to invest into cryptocurrency, ensure that you have a plan to pass on your cryptocurrency to your family in the event of your passing. Make sure that you tell someone that you trust about your cryptocurrency and educate them about crypto and how to access and sell the cryptos. Lastly, big disclaimer is to always pay your taxes. Depending on where you live in the world, follow your taxation rules and continue to pay taxes to ensure that you will not get into trouble in the future. I hope you have found this video informative. Stay safe and make gains. Please like and subscribe.